Happy Monday, everyone. Welcome to Money Mondays. I've got Will with me this morning. We have a couple topics we want to cover for you. We'll show this chart in a second. I got a couple things to look at here, but we saw this week that Magnify Money came out and said that in 2022, 38% of investors said they sold stock due to a current event. Will, what do you think about that?
It's really not shocking at all to me, Sean. I mean, you hear it in the conversations that you have with people every day. I know you do. I know I do. Everybody's trying to, guess what's going to happen next in the market. Everybody is super emotional. The average investor, invests based off headlines, right? Exactly what we are taught not to do, exactly what we've learned doesn't really work over the long term, but they're so quick to get in and get out based on what they hear in the news. And that can lead to some pretty poor performance, unfortunately. So no, that does not shock me at all.
Yeah, yeah. I would agree with you. Yeah, I wasn't shocked. To be frank, I probably would have expected it to be higher. I think if they just asked what retail investors did, meaning investors that were not working with financial advisors, I bet that number would go through the roof.
Yep.
Because we definitely got calls, right, of, hey, I want to get out of the market or sell some stuff. And, it's our role, it's our job to coach them to come back to their financial plan and why we invested in the first place. So I bet if it was just retail investors, that number would have been
Right.
significantly
Yep.
higher.
Yep. I
You agree
agree
with that?
completely with you.
Yeah. And we have another slide here of, these reasons to sell. So I know, Will, that you were looking at this.
Yeah, I mean, this is, exactly why we coach individuals into not investing on headlines, right? I mean, you can see at every point, every red dot there was a news headline that could have grabbed somebody and made them feel fearful about markets or where the economy was headed, and potentially push them into pulling all of their investments out. But when you can see virtually all of these red dots after, the market has continued and gone on to make new all-time highs. So, I think you had some additional thoughts, some points that you wanted to point out, but yeah, you can see that if they would have pulled their money into cash, they would have been leaving a lot of potential returns on the table.
Yeah, I've seen this chart several times over the years. They keep updating it, which is great. I love this chart. I mean, this is the go-to resource for me. When people want to bail out of their positions for one reason or another. The one that sticks out to me that's recent and we all went through it is COVID. You can see COVID went down 35%, and I think it was like 29 trading days or maybe even a little less. I mean, it happened in a hurry and the world was shutting down, right? And there were all these reasons to completely bail. And then what do we know? In very short order, it wasn't but about 90, 120 days, and that full recovery had happened.
Right.
So, there's always a reason, there's always a challenge. I've been thinking a lot that this is one of those moments that we're being challenged, to stick to our plan, to stick to our investment strategy. The market's challenging us, right? The news is challenging us. Your friend, your brother-in-law, your neighbor, everyone's challenging you to abandon your plan and your investment strategy. Speaking of those red dots you mentioned, I mean, since the market's last all-time high, I think 4 of them there, maybe 5. So we have inflation onset, the Omicron, what were they calling those things? The
The variant.
variant of
Right.
COVID, right? And Fed announces end of QE, Russia invades Ukraine, commodities spike, right? So, and then interest rates, started to go up. I mean, again, we're being challenged right now. You could argue that here in these last 18 months, there's more red dots than probably any 18-month time frame on this entire
Right.
chart, right? We
Yeah,
are
yeah,
really being
and
challenged right now.
yeah, and to your point about the individual investor, it's kind of counterintuitive when you think, but this chart outlines it perfectly, right? When those reasons to sell pop up, they're, as you can see from this chart, really great places to put your money in, right, and start investing more. So I think that's a really, really good point that this chart illuminates to kind of the individual retail investor, and what a lot of not as experienced investors don't really understand is you kind of have to flip your mind around a little bit, right? When everything is going at its worst, you got to kind of tell yourself that, hey, this could potentially be a pretty good place to put some money in to take advantage of, higher expected future returns. And that red dot right at the end of COVID, the beginning of COVID, is definitely a great example of that.
For sure. The big one, that we're hearing right now is interest rates, right? Interest rates have been going up pretty dramatically for, the last year, a little over a year. Just, last week we got that 25 basis point hike from the Federal Reserve. And, this chart, I think, tees up that headline risk a little bit, because we're hearing interest rates are going up, it's more expensive to borrow, right? It's going to cost you more for your house, cost you more for your car. You're not getting as much on your deposits. I think what people, don't quite understand is all of this stuff is already priced into the market. And I wanted to show this chart because you can see here on the left-hand side is different future Fed meetings and when they will decide whether to increase, decrease, or keep rates the same. And then across the top, you can see what that Federal Reserve rate is going to be. And everyone's talking about, are they going to keep raising or are they going to pause? And you can look, currently we're at 5.00 to 5.25 on the federal funds rate. You can see in that very top right box, there's a 93.3% chance, or let me rephrase that. The market has a 93% probability that they pause, that they do not go to 5.25 to 5.5, right? So all that's already priced in for the next, what do we got? 3 more weeks. Okay, then you can look out. In July, the market anticipates at a 51% probability that they're going to start cutting rates. Right? All we've been hearing is increase, increase, increase. Now, all of a sudden, the market believes in a matter of a few months, they're going to start cutting rates because the economy needs a little jolt to it to keep it growing. So, I think it's really tough for people to see those headlines that we were talking about, go make those decisions, because very few people understand that the headline's too late, right? By the time you read the headline, the market's already priced in, what that headline entails.
Yeah.
Do you have anything to add to that?
That's just a really, really great point. A really good, piece to keep in your mind that a lot of individuals, individual investors don't understand is those headlines are late. You said it perfectly. Those headlines are late. As soon as the headline comes out, there's been industry professionals working, under the assumption that headline was going to come out for, months, if not years in advance, and making decisions, prior to the general public knowing about it. So that is just why it's so difficult to time markets, so difficult to make all in or all out calls for yourself and for your money. And, when you make those calls, if you're wrong, they can really, really hurt your future expected gains and, the performance of your portfolio as a whole. So really important to obviously keep your mind forward looking always, but don't make any rash decisions based on what you see on the news or headlines that you see online or anything like that.
Yeah, I've started to sign off on my blogs. I don't know if I'm going to make it my regular sign off, but stick to your plan, right? And I add the word your in there instead of stick to the plan, right? Stick to your plan, because you don't want to stick to the news's plan. You don't want to stick to your neighbor's plan or your brother-in-law's plan. Like, stick to your plan. So I think that's a good way to end it. Stick to your plan. Don't let those news headlines bug you. There's, again, back to being challenged, like accept that challenge and believe in what you're doing long term. So we'll appreciate your time, everyone. Thanks for watching. We'll be back next Monday. If you have any topics, any ideas that you'd like us to talk about, drop a comment, shoot us an email. We would love to hear what you want us to talk about, because that will make creating this content better and more suitable to our listeners. So appreciate y'all. Have a great rest of your week. We'll talk to you very soon.